All right, let's jump right into it. We're taking a look at today's economic snapshot for August 20th, 2025. We're going to piece together the day's big financial story using all the latest data, so let's get started.
So, what is that story exactly? Are we looking at a day of caution, or is it one of confidence? Well, we're going to follow the clues, from the price of golds all the way to what the Federal Reserve might be thinking.
Okay, first up, let's feel the market's pulse. We're going to look at some key commodities. These numbers often give us that first little hint about what the mood is for the day. We'll kick things off with gold, which is trading around $3,325 an ounce. Now, what's interesting here is that it's up for the day. That often suggests investors are looking for a safe haven, a place to park their money amid some uncertainty. But let's hold that thought for a second, because when we look over at silver, it's a completely different picture. It's trading at about $37.22, but with a negative daily change. So right away, we're getting these mixed signals from the precious metals market.
And putting it all together, you can really see that contrast, can't you? Gold is up, silver is down. Meanwhile, you've got industrial metals like platinum and copper just kind of holding steady, which gives us a little clue about manufacturing demand. This isn't a simple one-way market today. It's a much more complex dance.
All of this begs the question, right? What are the underlying forces that are pushing and pulling these prices? To really understand that, we need to dig into what's happening in the broader stock market.
So a key concept here is the 52-week high and low. It's pretty simple. This is the highest and lowest price a stock has hit in the last year. Investors watch this like a hawk, as a signal of either momentum or some real weakness. And check this out. Today, we've seen 122 stocks hit a new 52-week high, while 106 stocks reached a new low. What this tells us is that the market is in a real tug of war. For every stock showing some really strong momentum, there's another one showing weakness. No clear side is winning just yet.
These movements aren't random, of course. They're driven by a whole mix of factors. Everything from how a specific company is performing, to trends in their industry, to the condition of the entire market. But that last ingredient, investor sentiment, that's often the wild card, that collective mood that can really swing prices day to day.
Okay, so let's zoom out from the individual stocks for a minute and get a real health check on the entire U.S. economy. This is where we see those big macro trends that end up influencing everything else. And here we see a major story playing out in the U.S. economy. After a slight contraction of 0.5% in the first quarter, the economy just roared back in Q2, expanding at a 3% annual rate. That is a significant and really positive turnaround. Now, what about jobs? Well, the unemployment rate for July came in at 4.2%. This number gives us a direct look into the health of the labor market. And to build on that, payrolls also increased, with 73,000 jobs added in July. So we're seeing this continued, maybe modest, but still steady growth in employment.
But are those strong job numbers actually translating to spending? Well, the data says yes. Personal consumption, what people are actually buying, rose 0.3% in June. That's a strong signal, because when people feel confident enough to spend, it fuels the entire economy.
So with that economic backdrop, what are the experts and traders watching right now? What are the key events today that could shift this entire narrative?
The economic calendar for today is absolutely packed. This morning, we got data on mortgage rates and crude oil inventories. Midday is all about the Federal Reserve, with several officials scheduled to speak. But the main event, the one everyone's waiting for, is this afternoon, the release of minutes from the last big FOMC meeting. That's where everyone will be hunting for clues about the Fed's next move on interest rates.
And beyond the government data, it's a huge day for corporate earnings. We're getting a direct look at consumer spending from big retailers like Target, Lowe's, and TJX. At the same time, reports from an international tech giant like Baidu and the luxury brand Estée Lauder will give us a much broader check on the health of both businesses and consumers.
Which really leaves us with the central question for today, doesn't it? We have a strong GDP signal and some crucial earnings reports providing a really solid foundation. But will the commentary from the Federal Reserve later today be the one factor that ultimately tips the market's delicate balance? That's what everyone is waiting to find out.